Hey guys, in this video I'll share how much income our $172,000 portfolio paid us in September and what stocks, if any, raised their dividends. Let's do this! Before we look at our 4-digit dividend income for the month, let me introduce myself for those that don't know me. I'm Mr. Financial, a self-directed investor of 20 years come November. I'm sharing monthly portfolio and income updates for our tax-free savings account here on YouTube and have been at it for just over 2 years now. I go over KPIs for our holdings, my thesis, stock news, dividend announcements, and more. Here's what our portfolio's dividend calendar looks like. And here's September, one of the bigger months. In September, we received dividends from 11 of our positions: Fortis, Manulife Financial Corp, Enbridge, Telus, Pembina Pipeline Corp, Brookfield Corp, MCAN Financial, Fiera Capital Corp, Smartcentres Real Investment Trust, Riocan Real Investment Trust, and First National Financial. This is how we do it. I'll go through each dividend we received, adding up the totals along the way, starting with the smallest payer in relation to our total dividend income on the year. Our smallest payer was Brookfield Corporation. It paid us $9.89, down from $10.01 last quarter. That was due to currency exchange. Brookfield provides us with 0.4% of our annual TFSA income. It has a dividend growth streak of 12 years with a 5-year CAGR of 8.4%. Next, our OG utility, Fortis, paid us a dividend of $77.29. This gives it a weighting of 3% of our yearly dividend income. Fortis is Canada's second dividend king, with 51 years of dividend increases and has a respectable 5.7% 5-year CAGR. It is currently yielding 4%. Stay until the end of the video to hear some really good news for Fortis shareholders. After 2 paychecks, we're at $87.18. Next, we received $82.29 from MCAN Financial. This represents 3.2% of our annual dividend income. Hopefully, MCAN Financial can keep up its 3-year dividend growth streak at its 5.1% 5-year CAGR. Usually, MCAN has been announcing a special dividend come the end of the year if they have excess profits. After 3 paychecks, we hit $169.41. Now for our 4th largest payer, Manulife Financial Corporation, we received $88 in dividends. MFC provides us with about 3.4% of our annual dividend income. Not only has Manulife been growing its dividend for 10 years with a 5-year CAGR of 9.9%, it still has a very reasonable 42% payout ratio. If only we added more to our position during COVID. Too bad, so sad. After 4 paychecks, we rocket past $200 to $257.47. Our 5th paycheck was $113.95 from Fiera Capital Corp. That represents about 4.4% of our annual dividend income. This is one of 2 stocks we own that doesn't have a dividend growth streak going. With its share price recovering, the yield has been dropping closer to its 5-year average of 8.5%, which is still very outsized. This remains on the chopping block for us. After 5 dividend payments, we're at $371.42. Our next dividend received was $118.68 from Pembina Pipeline Corp. It pays us 4.6% of our yearly dividend income. Its dividend growth has been muted with a 3.5% 5-year CAGR and a current yield of just 5%. This stock no longer falls into my rule of 12. And of the 3 pipelines, this is by far the most volatile with a beta of 1.48. With a half dozen paychecks, we're at $490.10. Next, we received an early dividend from Telus, despite the payment date being declared October 1st. We received $154.08. That represents 6.1% of our annual dividend income. Telus has had some hard times and still yields nearly 7%. With its 2% DRIP discount, 34% of shareholders, or 10 million dividend reinvestment common shares for $193 million, didn't have to come from free cash flow on the quarter. That is about $800 million on the year. That is why we see the share count up 2.4% on the year and free cash flow stable covering its dividend. After 7 paychecks, we're at $644.18. Our number 2 pipeline, Enbridge, paid us $162.18 in dividends in September. It represents 6.3% of our annual dividend income. Some KPIs to note are its 29-year dividend growth streak, its 5.8% 5-year CAGR, and a shrinking debt-to-EBITDA ratio with its continued growth. With oil and gas in favor now, Enbridge should be seeing some good quarters ahead. After 8 paychecks, we're at $806.36. Just a heads up, guys, I'm putting this video together in the middle of October as we were away for 3 weeks enjoying some early autumn sun in the Mediterranean. That means the charts will be a little off. However, all the portfolio metrics are as of September 30th, after market close. Back to the income. We were paid $60.36 in distributions from Smartcentres Real Estate Investment Trust. It provides us with 7% of our annual dividend income. This is the other position we hold that doesn't have a dividend growth streak going. With a yield of 7%, this is still below its 5-year average of 6.6%. I do not expect my REITs to reach or exceed the rule of 12, and this one is a far cry from it at the moment. With this monthly distribution, we hit $866.72. Our second biggest payer remains our one monthly financial payer, First National Financial. We receive $70.16 in dividends. It provides us with a large portion of our annual dividend income at 8.1%. It has an 11-year dividend growth streak, a 5-year CAGR of 5.3% on its dividend, and a reasonable payout ratio. Keep your ears open on their earnings call for a potential special dividend in December. With our 10th paycheck, we're at $936.88. And lastly, our largest payer for the month was Riocan Real Estate Investment Trust. They paid us a distribution of $71.51, providing 8.3% of our forward yearly dividend income. I'm expecting a small dividend increase in Q1 to keep its 3-year streak going and slowly bringing it back to its 12-cent monthly distribution. So after all 11 dividend payments, our grand total is 4 digits yet again, $1,008.39. That's the equivalent of $33.61 a day, or an hourly wage of $6 tax-free based on a 40-hour work week. It is nice to see the year-over-year comparison to September 2023. That year we had $741.80, so our income grew by 44%. We are on track this year for 19% growth. Woohoo! That's what I like to see. Our 3 largest dividend payments accounted for $434.94, or 43% of our dividend income for the month of September. Here's a peek at our portfolio breakdown. No one industry or stock dominates our dividend income. Our portfolio reveal video the other week showed the breakdown of our portfolio by industry. And now a massive part of our dividend income growth is from the dividend raises we receive. So far, we've received 11 dividend increases at an average increase of 7.5%. In the month of September, we had another dividend increase, bringing us to 12. Fortis raised its dividend 4.2%, giving it a 51-year streak to 61.5 cents a quarter. This increased our forward annual dividend income by $13.20. At a 4% yield, that's like adding $330 of capital to our portfolio. We ended the month with a forward annual dividend income of $9,650, with a yield on cost of 7.95%. We're inching closer to that 10K mark. With $47,000 to deploy in our TFSA this year, I anticipate we will finish the year with a forward yearly income of $12,000, or $1,000 a month, tax-free. Now, if the markets will just cooperate with me like they always do. Thank you so much for watching, and stay tuned for our big dividend month, October. Ciao for now.